Okay, so today I wanted to take a look at a property that I had purchased back in 2020, purchased back in 2010. And this particular condo I really liked at the time, and I kind of want to go over the reasons why. So this particular condo is located in El Cajon. It's a two-bedroom, two-bath, just under 900 square feet. And I picked this up in 2010 for 96,000. And I knew at the time that it would rent for 1,200. And with the homeowners being $238 and insurance being $20, I knew that I was going to cash flow. I paid cash for it at the time. I knew that I was going to cash flow about $854 a month. So the cap rate on this particular property is 10.7%. And of course it was all cash, so my cash on cash return was 10.7%. So anyway, I like that rate of return. 10.7% is really great. I don't know of any banks that do that. The fact that it is a condo is awesome because there's no yard to take care of. It had great access to the freeway as well. So if you take a look at it, I'll bring up Google here. "550 Graves Avenue, El Cajon." As you can see, I mean, it's real close to the freeway, easy access. I knew this was going to be a great rental at the time. And here's the property here. Actually, not the exact one, but you kind of get the idea. And nice little community here. Got lots of other condos and apartments here. So overall, I felt it was a nice little acquisition. And again, looking at the numbers, you know, for $96,000, generating $10,250 a year, I mean, that was a great return. And if you were to get a loan on it, let's see here, you know, your cash on cash goes up to 23%. And with only having 25% of your money in it, your cash flow, drops down to $467 a month. But with a lot less cash sitting in it, I mean, your cash on cash just goes crazy. So I felt that was a great acquisition back in 2010. Now that property has gone up to $245,000. So today, I mean, it wouldn't be such a good deal. Honestly, I wouldn't pick up this property today because right now the cap rate at its value would be 4.6%. Yes, rent has gone up to $1,417 a month, so now this thing's generating $11,200 a year. If you paid for it all cash, you get $934 a month. Again, cash on cash is about 4.6%. At those rates, I'd rather go pick up a bond or something like that. That's another discussion. My point is that, you know, for me at the time, 10.7% was a great return and something that's really worked out really well for the past 8 years. Now, my point in showing you this is that's kind of how the numbers are going to have to look like if you're looking for an income property that's going to generate, you know, a decent amount of money for you. Right now, I see people, you know, putting money into things like this at 4.6%, and you know, that's really not a whole lot of money for the amount of money that you're putting out. There's a lot of other investments that could, you know, equal that. My purpose with this is to show you what things should be. There's lots of other markets right now, and one of the reasons why I tell people to look at other markets other than San Diego right now, like in the Midwest, like Ohio, Indianapolis, Indiana, places like that. Much better returns for this amount of money. These kinds of opportunities here in San Diego have gone away. At the time that I picked this up, I mean, this was shortly after the crash, and I was just trying to buy everything I could from 2008 to 2012. It was just a great time to be cash flowing here in San Diego. Unfortunately, right now, with huge increase in property values here, it's much more difficult, almost impossible to get a decent rate at these prices. 4.6% being the norm right now. So I just kind of wanted to show you that, and the reason why is because I remember back in 2008, 2009, 2010, I was buying real estate like crazy with all the money, you know, it's putting every penny that I had in, and people were telling me, you know, God, are you crazy, Richard? Because, you know, real estate's crashing right now. What the hell are you buying property for? And I said, that's exactly why, because, you know, it's like a fire sale right now. And I'm glad I did it, because it's really paid off. All of the properties that I've picked up have pretty much doubled over the past 8 years, and has set me up for a lot of opportunities this year. So I want to share that and kind of show you what the situation looked like when it was a good time to execute here, and what it looks like right now. So I hope that helps you. I think we talked about all the factors. Oh, another thing about this property. So it is a condo. I like the fact that it was a low maintenance acquisition. It was pretty much turnkey. I mean, if you can see in these pictures here, I mean, this is kind of how it looked when I picked it up. This is not my unit. It's very similar. I mean, it came with granite countertops, stainless appliances everywhere, carpeting was all done, fresh paint. I mean, this thing was literally turnkey, and to get that kind of return on something that's turnkey, retail, total retail market purchase was just great. I mean, I didn't have to go through any back doors or channels to be able to pick up this piece of property, and it was just a great acquisition. So yeah, so it was turnkey. It was close to the freeway, easy access. I knew it was marketable because this particular neighborhood typically has a lot of renters in this community, so I knew it was going to rent really quickly, and it always has been. And the tenants have been great. In fact, the tenant right now has been with me for, I think, 3 years now, and never missed a rent payment. It's just awesome tenant, and I can't recommend this sort of a acquisition enough. So I hope that helps you. If there's anything that you see that kind of matches this, I say go ahead and execute on it. It's going to really work out for you, and I just hope that some of these insights help. So anyway, that is my property flashback or review of 550 Graves, El Cajon. If you have any questions, please leave them on the comments below, or email me at rickasadarealestate@gmail.com. Happy to help you out, answer any questions about your investments. Again, if there's any way I can help, don't hesitate to reach out to me. That's it for today. Happy investing, and I wish you luck in finding yours. Take care.